Ainsley, welcome. So, September, state of the market. What are we seeing?
What are we seeing? Oh gosh, there's a lot going on, that's for sure. Spring has sprung and everyone is moving.
Yeah, we're certainly, especially in Melbourne and Victoria, there seems to be a bit of a movement in prices for the first time in a few years, whereas clients in other parts of the country where it's been going up for quite a few years, but it seems like it's certainly moving down south now as well.
Yeah, absolutely. Seems like a lot of our customers are buying at the moment. So there's certainly demand out there. I'm not sure about the supply, but yeah, there's certainly a lot of demand and a lot of our clients have been buying the last month, which is great.
Yeah, and being outbid with that change in momentum with purchase prices, and obviously part of that's influenced by interest rates dropping this year. So on that, I probably should mention what's happening with the Reserve Bank.
Absolutely. They meet this week.
So the expectation is no change. Let's see. We've been surprised a couple of times, but I'd be surprised if we're surprised this week. I don't think there'll be a change. So I think rates will stay on hold. And then one of the majors, NAB, has come out saying that they're thinking there may not be changes to rates until May next year, which is a big change in the forecasts. And I think partly that's, or probably largely or partly due to the inflation numbers, inflation ticking up more than what was expected. So maybe we've had, well, let's see. Banks change their forecasts all the time. And at the end of the day,
They do, don't they?
The Reserve Bank will do whatever they see fit to do.
Well, I guess I was just talking about a lot of people buying, a lot of our customers buying, but majority of those are first home buyers.
They are, yeah. It's an absolute roll at the moment, with a roll as in just a lot of first home buyers talking to each other saying, let's go, let's do it. Borrowing capacity is increased. And the federal government certainly helped with part of that as well. You know, from the 1st of October, no income requirement on that scheme, which helps quite a bit. And then the maximum purchase price has gone up as well. So those two changes are putting a bit of heat in that market. And on one hand, it helps first home buyers. And on the other hand, it might help push purchase prices up. So there's, pros and cons, I guess, but we're certainly seeing more people saying, hey, let's get onto that scheme if possible. And there's certainly a lot of demand out there.
Yeah. And the scheme, for anyone who doesn't know, I guess, it's where the federal government guarantees up to 15% of the purchase price for the bank. So the first home buyer just has to come up with 5% plus costs.
Yeah. And there are still other restrictions. We've helped a lot of clients in that situation. And banks, there are a couple of rules around the maximum amount of funds someone can hold back. So I guess as part of the federal government saying we're going to help, they don't want first home buyers. You know, if a first home buyer's got $100,000 in savings, they don't want the first home buyer only, holding back like $70,000 of that, for instance. Generally speaking, holding back around $15,000, maybe a bit more is okay. But under that scheme, the first home buyer is expected to put the vast majority of whatever their savings are
correct.
The purchase. So the government's not, guaranteeing more than they need to, I guess.
Yeah. Is there anything else that we're seeing? We did get a report during the month in regards to lenders and who is being used more for.
Yeah. So we're seeing that more and more non-bank lenders are being used. And I think it was quite a few monthly updates ago that we mentioned what is a non-bank lender. They're becoming more popular. There are many non-bank lenders out there. So people think about Commonwealth Bank and NAB and Westpac and ANZ. They're obviously the big four. But then there's all these second-tier banks, like Macquarie and ING and St George Bank, Bank of Melbourne, etc. Bank of Melbourne is St George without getting too technical for everyone, but St George has got has different names depending on what state you're actually in Australia. But there are non-bank lenders, so they follow slightly different rules. But their offerings, if we go back 5-10 years, the interest rates used to be higher with non-bank lenders. But these days, might be a little bit higher, but not always that much higher. They have a different risk appetite, so sometimes they'll lend in different situations. There's probably not a month that goes by, Ains, where we don't use a non-bank lender in.
Yeah, that'd be right.
So, I think that's good for consumers because
absolutely.
Yeah, obviously our role,
Definitely.
we're trying to fit the jigsaw to get the right lender for our customers. And sometimes that's a bank, a big bank, sometimes it's a smaller bank, and sometimes it's a non-bank lender. So if anyone's watching football, as an example, whichever code of football around the country,
Yeah.
they might see Liberty on a football jumper or Pepper on a football jumper, and they're two non-bank lenders. And then on other football jumpers, and I'm mentioning this being, the end of September in terms of football finals time, but then there are also smaller banks like Beyond Bank, which is on some of the jumpers out there, which is a bank, but it's a bank that not many people know of. But we find it great, right, that there's more and more options for our customers.
Yes. And their service offering is usually much better than a big four bank.
Usually. Yeah.
Usually.
Yeah. True. Now, anything else otherwise?
No, I don't. I think that's plenty for people to take on board this.
All right. Well, then I guess until the end of October,
Yes.
anyone's team has been in the finals or is still in the finals, good luck. And otherwise, till the end of October.
Yeah. Bye, guys.
All right. Bye.